This presentation uses audio. Please check that your speakers are on and your volume is adjusted accordingly.
Hello, I'm Paul Finkbeiner, President of GWL Realty Advisors, the real estate investment management company that manages the Canada Life Real Estate Fund. We are one of the largest real estate managers in Canada. As a subsidiary of the Great-West Life Assurance Company, we manage several $billion worth of high-quality commercial and multi-residential real estate assets. Our senior management team has on average over 20 years of experience managing real estate. Here are some of the commercial and multi-residential properties that are owned by the fund. They're leased to stable businesses and professionals. An investment in the Canada Life Real Estate Fund gives you access to the investment performance of large real estate properties, an alternative asset class not always accessible to the average person. Why should you invest in real estate? Depending on how long you plan to invest or how much risk you're comfortable taking, real estate can play an important role as part of an investment portfolio. Fixed income investments such as bonds, money market funds, and guaranteed investment certificates tend to earn lower returns than stocks over time. However, stock prices tend to be more volatile. Investing in commercial real estate is a unique opportunity to diversify a portfolio and invest in large properties that over the long term tend to deliver stable returns. At GWL Realty Advisors, we buy, sell, and manage commercial and multi-residential real estate. Our approach is to buy the highest quality properties that provide a stable rental income and have the potential to increase in value over time. Investing in properties like this is an opportunity that isn't always accessible to the average investor. These properties are purchased for the real estate fund. This allows the people invested in the fund to participate in an investment in these properties. The fund holds 4 property types: office, multi-residential, industrial, and retail all across Canada. This is important because different regions can experience very different economic conditions that can impact the property market. Owning many kinds of properties in different regions provides more stable returns. There are 2 ways this fund generates a return for its investors. The first source of return is the stable rental income from long-term leases. The leases have rents that increase over time. The second source comes from the property's values, which have the opportunity to increase and generate a capital return as the rental income increases. These properties are leased to a variety of high-quality tenants such as banks, professional services such as doctors and lawyers, manufacturing companies, and retail stores. We maintain these properties to a high standard to ensure they remain attractive to tenants. This includes ongoing maintenance and, where necessary, larger renovations. Our goal is to increase property income so the value of the assets has the opportunity to increase over time. We do this by making our properties appealing to tenants so the buildings are leased for longer periods and at higher rents. The properties owned by the fund are leased to high-quality tenants for long terms. This helps to ensure a stable rental income and consistent returns for the fund's investors. This stability brings value to your investment portfolio. On a relative basis, the real estate fund has a history of consistent performance. As I explained earlier, the performance comes from rental income returns, and changes in property values, capital returns. Both returns are affected by changes in the commercial real estate market in Canada. But the ups and downs of capital returns are moderated by the more stable performance of income returns. Even in challenging economic times, the fund has held its value very well. The most recent rates of return are shown on this website. Those who invest for the long term have been rewarded with growth in their investment. The real estate fund is unique because it holds the majority of its assets in real estate properties and a small percentage in cash. This poses a unique risk. When there is an increased demand for cash from the fund will need to increase the cash it holds. The primary way to increase cash is to sell properties at prices that reflect fair market value. Properties take many months to sell. A quick sale to generate cash could negatively affect the value received for a high-quality asset, impacting all unit holders. When cash cannot be increased quickly, the fair and industry-accepted way to protect the fund and its investors is to have a temporary suspension of transfers and withdrawals from the fund until there is enough cash to satisfy any requests. A temporary suspension allows us the time needed to sell properties at fair market values to increase cash in the fund. The risk of a temporary suspension is an identified risk with the fund and why most investors should not hold more than 20% of their assets in the real estate fund. The real estate fund has performed well. It owns high-quality assets that are well managed. We are committed to offering this investment fund because it provides access to a unique asset class, which can be an excellent addition to your long-term financial security plan. You can find current information about the real estate fund, including the types and locations of the properties it holds, and recent fund performance here on this website, or you can talk to your advisor. Thanks for watching.